let's get to our stock of the day. And this is a retailer in the smaller end of the market, and it is Baby Bunting. So it is planning more store refurbishments after posting record full year sales and a pretty rosy outlook for FY26. Today's results did contain a trading update. Profit for FY25 rose 28% to $12.2 million. That's the top end of its range. Baby Bunting is planning 10 to 12 store of the future refurbishments in FY26 alongside 5 new large format outlets and 3 to 5 small format pilot stores. So the sales are up 4.8% in the first 6 weeks of the new financial year, driven by strong momentum in its New Zealand network. For one, Baby Bunting is guiding to FY26 pro forma net PAT of between $17 and $20 million. Today, look at that share price, up by close to 37%. So clearly one of these companies that we were told leading into this reporting season, if we did see a beat, we could see these really outsized volatile moves, and that's what it looks like to me off the back of that Baby Bunting result. Or Luke, is it justified? I mean, is this store of the future in Capital's transformation worth this share price appreciation today?
It could be, Nadine. It's certainly what's driving the stock. I mean, the actual FY25 result was towards the upper end of guidance, but it wasn't a strong beat. But it was the outlook they provided into FY26, as you said, 17 to 20 mil NPAT is a big jump on the 12.5, I think it was, they reported this year. And all of it being driven by these store of the future concepts. This one actually came up with Rich and I not too long ago. I went back and watched our segment on Baby Bunting. We both set a hold back then. For me, the reason being, some of this turnaround was already in the price. But I think what's probably got people excited today, and rightfully so, is that back then, I think they'd only transformed one store, being their Maribyrnong store down in Victoria, to this futuristic concept. I haven't seen it. It sounds interesting though, doesn't it? A futuristic Baby Bunting store. But nonetheless, management clearly seeing the tangible results. I mean, mid 20% same store sales growth when they refurb these stores to the new concepts. And as you said, now pushing really hard. They've identified 12 odd stores that they want to try and do over FY26. It's a big CapEx program, but if you're getting those sorts of tangible improvements and quickly too, not just scaling up the way a new store would, it makes sense for the market to get quite excited. Look, for me, I'll say a hold still, Nadine. It's had a strong bounce today. It trades cheap if you assume the top end of that guidance. For me, though, where I sort of have a little bit of apprehension is it's clear that this guidance relies on a smooth rollout of these new store concepts. You look at the way they've tiered their guidance. They're expecting 1 to 3% same-store sales growth in the first half. Some of that driven by, stores have to close for 8 to 10 weeks while they refurb. But then second half going to 6 to 8% and then targeting 15 to 25% on these new stores when they open. So I think there's a little bit of, maybe not blue sky is the right word, but some optimism in that sort of guidance there. So I just, say hold. Let's wait and see how they go. It's a big CapEx program for these guys. But if they make it work, it's early days, but the signs are pretty good for these returns for margins and return on capital. So
buy, hold, or sell, Luke. Buy, hold, or sell.
Again. I'll say hold, Nadine.
Okay. Richard, buy, hold, or sell for Baby Bunting. Based on what we've learned today, I mean, would you be piling in like many are?
I wouldn't be throwing the baby out with the bathwater, but I wouldn't be chasing. I mean, single theme retailers really do struggle over time against online competition, and you have to look at where it's come from, like a longer graph. Like it was $6 a few years ago. So it's really
change over to the 5 year.
I think what this is like the market is really hunting at the small end of town for value, and we're seeing really big spikes in shares coming off a low base. So we've seen that across, we saw it in lithium, we've seen it in liners, we're seeing investors really hunting for value and reward and spotting it outside of the mainstream, so outside of the indices. So,
there's that chart
that gives you a very good perspective on where they've come from. But,
If you were in Baby Bunting, though, would you hold it?
I would hold it.
Yeah.
I would hold it because I think the momentum's there. Like Luke very well explained, the momentum's there. There's a bit of optimism in the share price, but it's come from being overtly pessimistic, and management's got a good sort of strategy of home brand, so that should assist margin growth, and margins held their own. So I think it's probably a stock that I would hold. I mean,
Okay.
it's a stock that I would hold.
Okay, great. That's all we're after. Honest opinions only.